Hi, in this video, I'll be showing you three methods of entry confirmation using the M and W chart pattern. One of the challenges we have in trading is not the challenge of analysis, but the confirmation of entry after making our analysis. Because basically we can determine our trend using the trend line, structural point, or even using indicator to establish if at all we are in a bullish or a bearish market. But it becomes more difficult due to manipulations when it comes to finding a precise entry. So this video I'll be showing you exactly how you can make your entry using the M and W chart pattern. Now when it comes to M and W chart pattern, we have three major types of M pattern. First, we have the perfect M pattern, which will have something like this. So this is the perfect M pattern. Then we have the other one, which the first leg is longer than the second one. This one is like this. Then we have the other one in which the second leg is longer than the first one, which is something like this. So these are the major types of M pattern that we have. So when we say M pattern, it might sound somehow to you. Remember, it is this M pattern that we still refer to as double top. Okay, so it means that this is the double top. So this is the first top and this is the second top. In the same way, this is the first top here, this is the second top. This is our first top and this is the second top. So these are the three types of double top or the M pattern that we have. The M pattern which has an equal high, just as this. Then we have the M pattern which the first leg is higher than the second leg. And then we have the M pattern which the first leg is shorter but the second leg is higher than the first leg. And so this same thing is applicable to W pattern. We have a W pattern which is a perfect W where we have equal high and equal on the both sides of the leg. Then we have the other one in which the first leg is longer and the second leg is shorter than the first leg. Then this one will have another one in which the second leg is short and the first leg is short and the second leg is longer than the first one. So these are the major types of W pattern that we have, which is referred to as a double bottom chart formation. Now the question is, how do we make our entry? Now to illustrate this for you, for instance, the first thing you will see is you will get this first leg of the M pattern. Now when you get this first leg, in order for you to identify your second leg, there is a candle formation here that becomes the center for the formation of this first leg. So all you need to do is for you now to mark that first candle formation. You mark that first candle as a point of interest. Then you realize that price will come down and then price will go back inside of this candle and then get rejected and continue to the downside. Again, you will get a candle formation this way. There is always a candle that mitigates this first leg movement, which form this first leg movement. So you mark that candle out as your point of interest. Then you wait for price to pull back into that point of interest of that candle that you marked, and then it will move to the downside. If it is the one that the second leg is higher, you will have something like this. So even if this is the candle, price will go up above it, and then price will still come down, break that candle we are talking about. We can go above it. So this price going above this candle of the first leg, this price going above this first leg of this candle is taking liquidity. So this is a manipulation. So price will go above there, take this liquidity, and then still come and close it below this entry point, below this neckline. I beg your pardon. So this is how this tends to form. So your role is for you to mark out this point. Then you do what? You wait for price to come back and close inside. Now for the third pattern, you will have the first leg very short. When you have this first leg short, you realize that the second leg will come down, and remember, this is the first leg that you have, so your eyes is on this first leg. But price will still come down in a W situation and then still go back inside. So price will take this liquidity before it will now go back in. So in this scenario, most often is what gives us a divergence. Anytime that the second leg, whenever this second leg of the W or the second leg of this M pattern is longer than this first leg, if you look at your indicator window, is what present to us divergence pattern of trading. So having established this point, let us now move further into how do we make our entry. So with this illustration I just gave, this pattern consists, please, I will do one for M and one for W, which is applicable to the rest. So if we have this pattern, right, this is our first stop, our second one, then this is the neckline. So how do we make an entry? There are two ways you can make entry. If you are an aggressive trader, immediately price break the neckline is one of your entry. You can choose to sell immediately. But if you are a conservative trader, you need to wait for price to pull back, retest it, and then sell to the downside. So it is this retest that will give us a structural point, because here is a lower high now. So this retest is what will give us a subsequent lower high, and then this becomes our lower low. Right. Now in a W pattern, you will have something like this. So if you are an aggressive trader, immediately price break the neckline, you place in your buy. But if you are conservative, you need to wait for price to come, retest this, then you buy all the way to that point. So that is one way you can make your buy and sell entry. Another way you can do this is, after the formation of this pattern, after you have this first leg formation and price pull back inside, all you need to do is for you to mark this zone. In a downtrend, you mark it like a support. So once you have this zone, you are now waiting for price to come back here. So when price come back into the zone for the second time, you are looking forward for a bullish candle. So immediately you get this bullish candle, it now becomes your trigger and it closes as engulfing candle. You will now buy. And this most of the time is what will give you a sniper entry. So let's go to our chart and see how exactly we can find this pattern. Now it is important to note that these patterns are not traded in isolation. What does that mean? It simply means that you are not trading this pattern against the trend of the market. And as well, you are not trading this pattern just anyhow. This pattern needs to be found in your zone of point of interest. So here price has been bearish. This is a lower high and this is a lower low. So here price breaks structure. So the structure of the market has changed. And since structure have changed, from a sell, we will now be looking for opportunity to buy, right? So what do? We marked out our point of interest. So here we have this particular order block, which is our point of interest, right? And as well as we can use our trend line too, our trend line zone too are as well regarded as points of interest. So we must always take note of that. Okay, so now look at what happened. Price break the trend line and came to the downside. Now one of the reasons why this happens is that if you look carefully, we have, aside the other block point of interest, there is an imbalance here, which is a fair value gap. So when this price came down, what it does here was to fill the fair value gap and then pull back to the upside. So now let's look at this point of interest, where the price fill in the fair value gap on a 15-minute time frame. Alright, so look at what happened now. Price came down, right? Here, went back here, came back here, and then moved to the upside. So you can see the W chart pattern. So in this W formation, the first leg is shorter, but the second leg is longer than the first leg. And this can also be regarded as a double bottom. Okay, so this is bottom number 1 and this is bottom number 2. I remember I told us earlier that in most of the time where we are having one leg longer than the other one is what gives us divergence. So look at this. This is our divergence. Beautiful, and you can see how the trade plays out swiftly. Then let me show you another scenario. Look at what happened here. At this point, price returned to test the trend line, right? Remember I said this thing can happen around the zone. It can be a trend line zone or even a resistance zone, provided it is not in isolation. So you see this is a resistance zone because price reverses from here, and as well as this is a trend line zone. Okay, so now let's see this movement of price coming down a little. Let's confirm on a 15-minute and see what exactly plays out. Beautiful. Now look at this. Price went, price came down, price went, and then price came down. Now if you look at this carefully, this is a divergence. Why? What are we seeing on our chart? On our chart, this is the perfect M pattern formation. It is a perfect M formation because we are having almost an equal high on the main chart. Do you see that? But if you look at our indicator window, we are as well having a divergence. And because our point of interest, you can see that very perfect, very sharp and swift movement. So this is exactly how you can trade the M pattern formation. So now, remember, in the first scenario, I said there are two ways for you to do it. It's either you want to be aggressive or you want to be conservative. Look at what happened here. Price came down, went again, came down, and went to the upside. So if you want to be aggressive, this is the neckline. So immediately price break this neckline, you will buy at the close of this candle, right? But if you want to be a conservative trader, you will always wait for a retest. Look at the retest. After price break it, you can see that price return, retest it, and then continue to the upside. So this is how it works, and you can see exactly. And most often when price is coming to retest, you realize that there is also a point of interest regardless of the time frame. Like in this scenario, we are having a fair value gap. This is a fair value gap. So price came back, fill into this fair value gap, and then move back to the upside. So you can see that how it went. Then price has to come back, fill into this fair value gap, and then give that move to the upside. Then in this scenario, you can see this one now. Price went, came, give us that L pattern formation, and has break a neckline here. So the neckline has been broken. But in this scenario, we don't have a retest yet. So maybe when the price is open for the new day, it will pull back to retest it before it will continue. We don't know, or it will continue straight, whichever way. So thank you for watching to this time, and I believe you have learned something new from this video. Do well to backtest it. Now the advantage of this strategy is that it is mostly used when it comes to reversal too. It plays out very well. So let me hear your feedback in the comment section. Thank you for watching. Thank you for your support. Thank you to all our new subscribers. I'm very much grateful, and we hope to bring value your way that will change your trading in no small way. Thank you, and see you in the subsequent video.